There's a certain amount of risk each investor can take when investing in the stock market. Usually, this depends on a person's age and/or risk tolerance. So when it comes to picking the right stocks to invest in, some might choose the safer options while others would go boldly and pick something more risky but with a higher reward. However, there is the question of how much risk is too risky and how much safety is preventing one from thriving in the stock market. So which is better, playing it safe or taking your chances for the bigger prize, or perhaps doing a bit of both? Let's find out in today's video. Hey, welcome to Stock Market Mate. Today we'll talk about dividend investing versus growth investing. Before we get into it, subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Ultimately, we all want to have a good return for our investment, which is why, as investors, it's essential to pick the most suitable and stable stocks to invest in. Recognizing your own risk tolerance is even more important for your investment choices. With the stocks you pick to invest in, based on your personal preference, you might be able to achieve a promising portfolio. That being said, let's take a close look at two stocks in the market that most investors claim to be very effective at generating higher profits: the dividend stocks and growth stocks. If you haven't heard of either of them, a dividend stock is basically a profit gained through the dividends or payments that a company gives its shareholders every year, while growth stocks are profits from companies that are expected to increase at a faster rate over the years than the average market. Both stocks have great advantages and disadvantages that every investor must take note of in order to weigh their options. Pros and cons of dividend stocks. Let's talk about the advantages of dividend stocks. First of all, dividend stocks are stable. Because of its passive nature, dividend stocks tend to be more stable than the stocks in their market, which means it is a great source of income for all investors, especially beginners. Because these dividend stock companies offer high payments constantly and distribute them to all the investors or shareholders, in turn, they provide investors a regular source of income. Next is that dividend stocks are significantly less risky than the other stocks. Dividend-paying stocks do not decrease in value if the economy crashes. In this regard, they offer a superior risk-return value compared with growth stocks. Furthermore, dividend stocks are a reliable option on capital protection since they retain their value during harsh market movements. In addition to diversifying the risk potential, these stocks also contribute to a portfolio's performance. Another advantage of investing in dividend stocks is that they offer dual benefits to investors. Such dual benefits include value appreciation and the regular income that we previously mentioned. Lastly, dividend stocks are less prone to market volatility. There's no need to spend a lot of time monitoring and tracking stock movements in the market, as dividend stocks are stable, which means there are fewer chances of unexpected swings in the price. All you need to remember is to apply the classic buy and hold strategy when investing in dividend stocks. Now let's talk about the flaws or disadvantages of dividend stocks. We have the investment risk. Yes, although dividend stocks are stable, they still hold risks. This is due to the fact that stock prices can often go down by a lot. As a result, dividend investors can have substantial losses. There's also the fact that dividend rates can vary from company to company, meaning some company pays higher than the others. Pros and cons of growth stock. Growth stocks are those that are expected to increase earnings at a faster rate than the average market as the years go by. These are usually from companies with higher growth potential. Profits of the company are reinvested in capital projects as retained earnings instead of being distributed as dividends. These stocks trade at a premium value due to expectations of rapid growth. One of the many advantages of growth stock is that a single investment in a company with great potential can help you earn a whole lot of money. A poorly timed purchase of a growth stock can be salvaged by meteoric growth for a sustained period of time, so timing is not critical if you can buy it early enough in the growth phase. Moreover, the stock prices of these companies tend to climb like a staircase as they consistently beat earnings estimates. On the other hand, the downside of investing in growth stock is that, while they're in early stages of rapid growth, dividends are never paid. Additionally, these stocks are rarely cheap, so you're going to pay a high multiple of earnings and be feeling overcharged in most cases. In other words, while it has splendid rewards, it holds so much risk that might not be ideal for first-time investors. Dividend stocks versus growth stocks. Which is better? Understanding growth and value investing is crucial to your investment journey. A value stock is no longer a value stock when its intrinsic value is realized. In a similar way, if the price of a growth stock falls substantially, it loses the growth attribute but still retains a great deal of value. You need to know that neither of these investment styles are guaranteed to provide a positive return. Hence, the answer to which one is better solely depends on the investor. Ultimately, it's up to the preference, risk tolerance, and investment goals of an individual. You may opt to invest in funds that combine the two types of stocks, unless you prefer one over the other. Nonetheless, the bottom line is, when investing in the stock market, it's always good to diversify your investments. Play it safe and take some chances, especially if you're young and just started on investing. Take all the risks necessary for your growth as an investor, all while making sure you don't fall into some kind of trap which results in you losing all your money. The younger you are, the more risk you are able to tolerate. Hence, generally young investors tend to have more growth stocks in their portfolio, while those that are closer to retirement settle on the passive stocks such as dividend-paying companies. Summary. A quick recap. To sum it all up, let's go over what we just discussed. Dividend stocks are much safer compared to growth stocks. However, growth stocks provide more reward despite its risk. Choosing to invest in dividend stocks will help you earn a regular source of income without worrying about being affected in economic crashes. This is basically ideal for investors who want to be cautious, as well as investors who are nearing retirement. Meanwhile, growth stocks hold numerous risks, which is why only young investors can take advantage of those risks in order to gain a much bigger profit. Furthermore, there are 3 key things you can remember on what your next move should be as an investor. The first one is to recognize your risk tolerance. Try to understand your risk profile. If you're willing to take risks, then you can go ahead and take those risks when investing in growth stocks. Or if you're more of a passive investor and prefer to invest long-term, then perhaps a dividend stock is best for you. The second thing you need to keep in mind is to try to make a hypothesis of the direction of the market. Monitor and see where it's heading in the next few years. For example, recently we've hit a bull market which resulted in dividend stocks underperforming. The third thing you need to remember, and this is really important, you need to diversify your holdings. Always. Because no matter what happens in the stock market, if you diversify, you'll have at least 1 or 2 holdings that will act as cushions of your portfolio, meaning you're always safe with owning different kinds of stocks. In the end, what's important is what is best for you. What strategies suit you? What stocks best provide for the success of your investment goals? Hence, don't be afraid of investing in all these different stocks unless of course you don't understand them enough. Because inherently, you'll need experience for growth. And in the long run, having these experiences is going to make you a great portfolio as well as turn you into a wise investor. That's about it for today. If you found this video helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these 2 videos right here. Enjoy!